Bon dia, and welcome to Move to Portugal Daily, episode 124, 2026-0519. I'm Mateus Costa with the Portuguese Pride Network. In the next 10 minutes, I'll give you exactly what you need on Alojamento Local Playbook, exact euro numbers, licensing risks, and visa impacts for Lisbon, Porto, and the Algarve. Let's run the numbers.
Picture this, a sunny Lisbon terrace with a morning coffee, a duplex overlooking the Douro in Porto, and a wall-walled villa near the Algarve coast, each one advertised as a high-yield short-term rental. Those images sell dreams, but the math behind them can make or break your move. Today, we'll cut through the listing photos and focus on hard euros, licensing risk, and how that income actually moves your visa or creates exposure.
By the end of this episode, you will have 3 city-specific case studies with exact euro figures, the one-time and annual licensing costs to budget, the real tax interactions with D7, golden visa calculations, and NHR/IFSC reporting, plus a 5-point mistakes checklist and a one-step Legalize AL action plan you can follow this week.
First, the basics and how AL interacts with residency. Alojamento Local must be registered with the local municipal authority and declared to the tax authority. For anyone using rental income to support a D7 application, the key is documented, recurring income, banked, receipted, and conservative. Short-term rental revenue can count, but CEF looks for stability and proof. 12 months of receipts and matching bank statements beat optimistic forecasts every time.
One quick flag on golden visa and tax regimes. Operating short-term rentals can complicate golden visa investment calculations and will trigger local tax reporting under NHR or IFSC pathways. If you plan to rely on property as your qualifying investment, check the current golden visa rules and whether revenue-generating activity changes treatment. When in doubt, structure conservatively and get registration proof before you count that income toward any application.
Now, the Lisbon case study. Realistic numbers. Typical centrally located one-bed or studio. Average gross revenue 2,500 euros per month on a blended 12-month basis. Itemized expenses I use for a conservative budget. Cleaning 150 euros. Platform fees 300 euros. Utilities 150 euros. Property management at 15%, which here equals 375 euros, plus a maintenance reserve of 225 euros. Total monthly expenses about 1,200 euros. Net comes to roughly 1,300 euros per month. One-time AL registration usually runs between 100 and 250 euros, and on a property with a municipal taxable value of 350,000 euros, you might expect an IMI bill near 1,050 euros annually, depending on the municipality's rate.
Porto looks different. Average blended gross approximately 1,800 euros per month for a central duplex or upgraded T1. Use a tighter expense profile. Cleaning and platform fees scale down. Total expenses close to 900 euros per month. That leaves a net of roughly 900 euros monthly. Registration costs are similar, 100 to 250 euros one time, but expect slightly different municipal coefficients for IMI and different seasonal occupancy patterns, so plan for a slower low season and keep 3 months reserves.
The Algarve is the high variance case. Peak months push gross to 3,000 euros or more, but a blended annual average is closer to 2,000 euros per month. Expenses are higher for villas and seasonal turnovers. Assume 1,500 euros monthly for cleaning, utilities, insurance, and management. Net, therefore, ranges from about 500 up to 1,500 euros depending on occupancy. Budget for AL-specific insurance and a fire safety or technical compliance review when you register. Annual insurance and extras can add 300 to 700 euros a year. For visa income planning, the Algarve seasonality means you must use a 12-month blended average, not summer peaks alone.
Action steps. A one-step checklist to legalize an AL and 5 common mistakes to avoid. Stepwise. 1. Register with your camera and obtain the AL registration number. 2. Declare the activity to AT and ensure you issue official receipts for every stay. 3.
Open a dedicated bank account for rental receipts and keep management contracts and invoices. 4. Calculate a conservative 12-month blended income and attach bank statements when applying for D7. 5. Budget contingency. I recommend 5,000 euros for fines, retroactive taxes, or compliance fixes if anything is missing. Now, the 5 mistakes. 1. Listing before registration. That triggers fines and retro tax assessments. 2. Counting projected peak revenue instead of a 12-month average when proving D7 income. 3. Failing to issue official receipts and therefore creating tax exposure. 4. Double counting the same revenue in NHR and IFAQ declarations. Be careful with foreign versus Portuguese sourced income. 5. No documented property management agreement. CEF and AT prefer contracts that show professional handling.
A practical listener scenario. You own one Airbnb and you're applying for D7 next month. Exact next steps. Stop new bookings until you have registered. Complete your camera and AL registrations and collect the AL number. Run a 12-month income report and move receipts into a single dedicated bank account. Prepare 3 months of management invoices or owner receipts plus bank statements. Present a conservative monthly average to CEF. If your blended average supports the D7 threshold, include a signed management contract and the AL registration number with your application. If you don't have 12 months of history, supplement with a management contract projecting guaranteed monthly distributions, or consider pairing with a stable pension or passive income source while you build AL history. Download the AL checklist and the 3-city spreadsheet in the show notes to run this for your specific property.
That's your move for today. If this helped, hit subscribe on YouTube and follow on your favorite podcast app. For more information, visit nomadlifesuccess.com. This is Mateos Costa. Saúde, and I'll see you tomorrow.